Wayne Crockett. Morning, everybody. How you doing? You ready? Welcome to forex.today, everybody. How you doing? I don't know if you saw that. YouTube at the end gave me a choice of videos that I should watch, and one of them was how to breastfeed. So I don't know if you just saw a big booby picture, but that's what YouTube showed me. I'm like, whoa, that's a forex. All right. I don't know if 8 is a real name, but I know 8 is a real number. But anyways, hey, welcome to forex.today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yes, 8, and to anybody else, if you could change your login name to a real name, would be preferred. I like to think of this more of a LinkedIn than a Facebook. You know, this is our job, this is our career, we're professionals, you know, that kind of thing. Yeah, why not? So we're comrades in arms. So anyways, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. My name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. Thank you for being a client. I am here and charged with the duty of helping you become successful. Not necessarily to be a guide, but to teach you how to guide yourself. Rely on no one but yourself in your analysis. I think that's incredibly important and it excites me every day. So nobody tells me what to do. Even if they did, I probably wouldn't do it. So, very nice, right? How to be an independent trader. I'm here at 7:30 in the morning. I'm here for you, mate. First Friday of the month, I'm at FX Street. Awesome. Do non-farm payrolls live. What else? I've what, 15-something years experience trading Forex? Cool. So I'm here to help, ask questions. Otherwise, I will just review the market and tell you what I think, with the hopes that that's helpful. But I encourage questions. Okay. Again, I don't know. I have less time than usual. I'm in the middle of midterms at Harvard. So far, it's been hard. I don't get it. The brochure said Harvard would be easy. It's totally lied. Totally. Doesn't that suck? How come it's not easy? Ow! Stupid. Yeah, actually, yesterday's exam was lame only because I don't know, they tested the wrong things. Don't you hate that? Is that right, Gene? Yeah. So, anyways, the professor totally messed up. Asked all the wrong questions because I didn't know any of them. Like, what question is that? I don't remember that being covered. And that's frustrating, isn't it? So here's how I would do it. 3 core concepts. That should be 66% of the test, and then you throw in some randoms to maybe trip a few people up, but that's not what happened. So I don't know how he came up with the test. So anyways, let's move on.com. All right. Where do you want to start? Do you want to do iron ore? Do you want to do coal? So we don't cover any of that. But how about Aussie or CAD? Let's do Aussie. Neat, huh? Look at all this resistance that we have up here. What do you think this yellow means? Why do I have a cluster around the R and here? You think all this stuff might have been important? Right? This little idea. Right, there you go. Okay. It's another way of doing it. Look at the pivot, guys. One touch exactly to the pip. One touch, 1 pip short, actually. Another one pip above. So this is exactly to the pip, 1 pip short, 1 pip above. But let's just call it 77.47. Okay? Now, the first thing you need to do in rewiring your brain, right, is to stuff away bits of information that you think you know, but you need to know it in different ways, right? It's like riding a bicycle. That stuff you just somehow remember to do. You know, taking the standard form quadratic equation and you know, pumping it through a formula is something that is not the same. You don't remember these things, so you got to plug them into everything. Well, in this case, I want you to look at, first of all, pivot points seem to me to have been incredibly important to this price action, okay? Because it did stretch a little bit above price action resistance to include that in the analysis. So the first thing I need to say to myself is, hey, Wayne, it seems to me that market participants are definitely using pivot points. And therefore, I must respect my pivot points too. And that's the first thing. The second thing is, well, what kind of pivot points? Daily, weekly, monthly? Well, these are monthly pivot points. It seems to me that somebody was paying attention to monthly S1 or monthly M3. Someone was paying attention to monthly M1 and then monthly support again, right? And then all the way up to monthly R1. Somebody, and somebody big or a lot of people, are using these pivots as well. And therefore, I must state the obvious, I must use them too. Okay? And that's stuff you'll never forget. Right? The stuff you do forget are things like X is equal to minus B plus or minus the square root, don't you love this stuff, of B squared minus 4AC right? Oh, divide the whole thing by 2A, where A, don't you love this stuff, is X squared plus B X plus C is equal to what? Does anybody know? Come on. Dude, I'm like 40 something and I'm no joke, twice the age of my classmates. And they're like, yeah, I did this last year in high school. I'm like, oh my God. They're like, I did that in 5th grade. I'm like, I don't remember 5th grade. Nobody remembers? 0. All right, yeah. So answer me this. Factor 3x squared minus 2x plus 15 equals 0. You know, yeah, that's what I get to do with my free time. Yeah, I don't know, man. I don't know. And that's just one step in the question. I'm too old for this crap. Oh no, well, I'm taking multiple classes. Yeah. Yeah. So anyways. No, but there is algebra in game theory. I don't know if I could explain things like this, but what you do is you take like, let's say there's a mixed strategy where you have player one. Let's make an easy thing, right? Let's do rock, paper, scissors, right? Rock, paper, scissors. I mean, this could be like war, status quo, or something else, right? I mean, this is all to do with international relations. But rock, paper, scissors for player one. Player two, you could do the same thing: rock, paper, scissors, rock, paper, scissors, right? Actually, this might actually be the wrong kind of game for what I'm thinking. So you wouldn't do a mixed strategy in this one. All right, let's do something different. Blue, maybe it's easier to see. All right, let's do a different one. It's baseball, okay? And the batter is preparing for either a fastball or a curveball. So that right? The pitcher over here is deciding whether to throw a fastball, right, or a curveball. And right, so then you got to create, and then you have payoffs for each of these strategies. And the pitcher is going to mix the strategy. So he's not just going to throw fastball, 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 even if the fastball is the best pitch for him. He has to mix it up a little bit, because if the batter's anticipating the fastball, he can be ready for the fastball. And he knows the pitcher's good at the fastball. He's like, man, this pitcher's got a good arm. I'm going to be ready, right? And he's ready for the fastball. If he's ready for the fastball, then it goes, right? So what you need to do is then mix it up. Well, what percentage? Let's mark that Q. What percentage of the time will the pitcher throw a fastball? And then the remaining, which is 1 minus Q, would be the remaining probability of the pitcher throwing a curveball. But then you do like maybe X for the probability of expecting a fastball, 1 minus X to, the remaining probabilities, and then you got to take the payoffs, which might be like 3, 2, 1, 4, whatever it is, 4, 1, 2, 3, or something like this, right? And then you got to figure out the probabilities. So then you got to use algebra to figure out the probability of Q and the probability of X. You see what I mean? So, anyways, you asked. There you go. Yeah. So you got to figure that out. It's algebra. I mean, that's it. It's not a problem. What are the probabilities? So you have to look at the payoff of throwing fastballs. The expected utility. Sorry, the expected. So you write it like things like this. So therefore, the expected utility of the fastball is equal to, and then you bust up the formula. I don't want to do this. That was so yesterday. All right. So anyways, yeah. So you got to program your brain into things you can't forget. Because I'll tell you what, I'm not going to remember that quadratic formula more than 2 days. Ask me on Monday what the quadratic formula is. I don't know. Minus b plus or minus the square root, right? I mean, I'm going to forget. What I won't forget is pivot points. What I won't forget is support and resistance. Do you understand that I've been spending 12 hours a day for 12 years, reprogramming my brain to recognize patterns. Right? Now, maybe taking classes is a good thing. It keeps your brain fresh, right? Keeps your brain strong. But I know these things because I've plugged these things away intellectually. But there's the spiritual and emotional side of the brain and all kinds, right? The ego and the super ego and the id and all that kind of stuff. You really got to program all this stuff around in different places, and that's why I say you need to really, and maybe say it out loud. Maybe say it while you're doing jumping jacks. In my book, I tell you to write things down with felt tip markers so that you can smell it as you write, and that knowledge gets put into the olfactory parts of your brain. Like, I really mean rewiring the synapses of the gray matter between your ears. And so little things like this seem trivial, but they're actually very important, right? So, do market participants use monthly pivot points? Yes. Should you use monthly pivot points? Yes. Do you think that this M3 was important to someone? Yes. Do you think some of them took profit here at the support? Yes. Do you think everyone else took the profit here at M1? Yes. Do you think they tried again here, the bears? Yes. Do you think they took over here and here again? Yes, I do. Honestly, I think that's what they're doing. Whoever sold here made money. They either made this amount of money or they made this amount of money, right? They tried again here and it didn't work out. They tried again here and it did work out. Okay? The bears did exactly what you would expect the bears to do. And this is why I say things like when we get to like stuff like this, right? Like, I don't know if I said it, but it's implied, and I know I say it with other things. But I say things like, they absolutely will act here. They will absolutely expect this to be resistance. There will be bears here. Some bulls will take profit. It's certainty, right? Right? You hear that when I coach you, right? That they will behave in a certain way here. We don't know how many bulls will take profit. We don't know how many bears will sell, but we know it's going to happen to some degree, right? We know what will happen. We just do not know to the degree in which the other players, if you want to look at this as game, right? The intensity in which the other players in the game will act, but they will act rationally, right? They're not doing this out of revenge. They're not doing this necessarily out of stupidity, although there are a lot of stupid traders that just don't know what's going on. They're not big like these guys. They don't move the market. When you make a bad trade, you're not moving the market, right? So we know that what we're looking at represents rationality, rational players acting in their best interest. A bull should take profit here because it is resistance, whether you define it with price action or with pivot points. Okay? And we knew that days ago. You understand? So now we can prepare. And I think I did things like, as this was rallying up, and say, wow, that's overpriced. Can't really do anything there. That's why, guys. That's why you can't buy it there. Now, even if it went all the way up, you still can't participate there. And then I think this took off, right, with the Fed stuff. And I'm like, well, that's really unfortunate because that's almost impossible to grab. And once it's up here, you can't buy it there. That's why it's really unfortunate. And then it all collapses, right? Cool. Hey, Gene, where'd you go? Not a Yale person. Not Yale, right? Oh, okay. Well, you can stay there. I was about to kick you out of the room, but no, you can stay. Right? No one from Dartmouth ever hurt anybody, right? Okay. Let's say prices between uh, MS and MM2. MS, yeah. Right after. Well, okay, this area here is what you're talking about. Let me do it in a different color, right? That's what you're talking about? Yeah, that is a very tricky area. Now, first of all, the very first day of the swing trading class that I'm leading right now, the very first day, it was like a Tuesday or a Wednesday or something. We looked at this and we said down to M1. Cool, right? Great. That was the very first day. Cool. Well, a week and a half later, we're done for the month. So that leaves us with, well, profit taking, especially at the 5A cross. And it also leaves us, because it happened early in the month, with a potential counter trend trade. So you got that going on. But you, based on this time frame, you still hadn't made a higher high. So there's a lot going on here to be careful of, because as a bear, if you didn't know the counter trend trade, by the way, I only taught 2 counter trend trades, right? And that's one of them, so if you didn't know that, I think a bear would have tried again here to sell. And if they had, there was some chance they could have gotten down here, some reasonable chance. So, if you sold here, that's great. If you sold again here, that's great. And even if you sold again here, that's great. Okay? But you have to have made that decision ahead of time. And I wish there was an easier sort of way to predict that it was going to go back to the central. There isn't. It's just, I've looked at this pattern thousands of times. Not just monthly, obviously, because I haven't traded for thousands of months. I've traded for hundreds of months, right? But including weeklies as well, not dailies, but weeklies and monthlies. The combination, I've looked at thousands of examples, and something that my brain has picked up, and there might be many other examples, but if you're aware of how the brain works, what happens is you get settled into the things that work for you, and you start avoiding all the things that created pain, right? So you stop doing, at least if you're a survivor, you stop doing all the things that hurt you, and you start picking up the things that work for you, and then you just stop looking at other things. But I'll admit that's true for me, where I haven't discovered another counter trend trade in years, but nor have I looked, right? You understand? So I only know 2 scenarios. And after seeing this pattern, it seems to me the vast majority of the time, very often, it goes back to at least the central pivot. Then I tell you, because I've done this hundreds of times, actually I've given the advice thousands of times. I know what I say every time, because there's only one thing I say in this scenario. That if it does make it back to the central, sometimes it goes up, sometimes it goes down, and I haven't actually calculated the probabilities of each, or all that kind of stuff. It just seems to me about the same. I don't really know. So the only counter trend trade in this scenario is back to the central, and then done. Don't really know. And then I would look at that and say, well, there's a lot going on here, there's a lot going on here. So I certainly wouldn't want to be buying more. I might choose to keep my stop or trail my stop. I may choose to not get out, especially if I thought something interesting was happening. But there's no way of knowing that ahead of time. But that's the truth of it, right? But you have to know when you don't know. You have to be honest with yourself that you don't know. Or you're a fool, right? Or a salesman, salesperson. I always know. I just knew it was going to go up there. Uh-huh. So anyways, this one's tough. And it comes down to, if you were playing the counter trend trade, you would have stayed long. Or you would have been looking for a dip. And you might have bought like the 5A cross up here. Okay? Hard to say. If you didn't know counter trend trade, then you would have sold here, and you probably still didn't lose money, or you lost a little bit. Okay? And then of course the Fed stuff. Look, if you knew it was going to go up, great. Your alpha worked. Right? Right? Great. But I didn't know it was going to do that. Okay? And then once it happened, there was one kind of shot for you. It wasn't terribly easy. Okay? But it's this idea here. Okay? Okay? So what about this area up here? Well, I want to remind you, we knew it was resistance. So if you were buying it high up in here, you're a bad currency trader. I don't care, even though it's going up, that's a bad place to buy. If you bought down here, that was great, man. Okay? Okay? Once again, pivot point, a central pivot point, an important pivot point. It's a pivotal point in the market, right? Great. So up in here, you can't buy it. And the reason I coach you that you can't buy it is because we believe some bulls are going to take profit. Some bears might sell. So you don't enter here. And even if you bought down here, let's say, or you bought here, let's say, you should still recognize that this is the resistance zone. And if it failed here, you got a problem on your hands as a bull. Okay? A top, right? Lower low, right? Top again. There's a lot of problems going on at that level. So you need to act, okay? Okay? You need to recognize that that's where the risk is to your open positions, right? So you have to analyze it and recognize it. And then understand that you managing the risk means things like maybe take all your profit, get out. Maybe take half your profit. Maybe you move your stop closer. Or you plan things like, if it makes a lower low, I'm out, right? What's the, right? Where's the low? Well, the old low is here. The new low is here. So your stop should be right about that. And if you were a bull back here, there's no way in the world you should still be long, unless you're not managing your risk. That needs to be said, because every once in a while, we'll go through an old trade plan and some guy's like, yeah, I'm still losing money from 2 weeks ago, Wayne. Should I get out? I'm like, what? Yeah, I'm long, but it's been making lower lows and lower highs for like 8 days in a row. Maybe I should get out. What do you think? And I'm just like dumbfounded, right? You're long and it's making lower lows and lower highs. Why are you long in a downtrend, right? So in this case, you were expecting a higher high, right? So let me change colors again. In this case, right, what's the plan? You bought here because you expected a high. Great. You bought here because you expected a new high. How do you feel about like double tops? Does that make you feel good as a bull? No. And how do you feel about like a lower low, right? Cool. Right? So somewhere in here, you need to recognize, like, look at the moving averages, right? That's failed. Now we're breaking that. This is a 4-hour chart. Oh my gosh, Becky, look at that. So if we drop into, right, what do we call this? Let's get rid of this. That was an old probability. Just delete it. So it's an analogy from the book. Higher low, higher high, higher low, higher high, right? Retracement, failure, lower low, lower high, lower low. Eventually we'll do this, is what one would think. Yeah. So the way you would draw it in a different fashion is it's okay. It rolls over. It's very rare that you see things like this, guys. Okay. That's why double tops are so important. Uh-oh, I'm gonna sneeze. I'm still a bit sick. An old man easing into a hot bath. That's the analogy from the book. Okay. And you can see it's there in reverse. Okay. So bears had a trade plan. Bears had it this way: down, up, down. Then how did the market reverse? Right. So you have the slow motion, right? These are hourly candles, right? There's a lot of time going on here. Okay. It's not a V shape at all. It didn't just hit M1 and go straight back. That's why we use price action. Okay. Anyways, lots of resistance going on. Cool. That's why you don't buy at resistance. So that's Aussie. What are the commodities that affect Aussie dollar? Iron ore, coal, and gold. Yeah, Michael, I want to comment on Michael's inverse head and shoulders comment, which is absolutely true. The reason you use a leading indicator, like a pivot point, is you know where to expect them before they happen, right? Weak traders know what a head and shoulders is, and once they've happened, they're kind of reacting to it. Maybe they get one last part of the shoulder, something like that. But a more skilled technician would see the head and shoulders coming well before it's even formed. Okay. So yeah, inverse head and shoulders, true. The more important thing is it happened at the M1, and we already had a plan to take it back to the central pivot. Right. Again, that's something we talked about in the swing trade class when we were down in here somewhere. Like, it has a propensity to retrace back to the central pivot. Great. So is it going to go straight there? No. It's going to go up. It'll retrace. Well, how would you play that? Well, how about an inverse head and shoulders type scenario, right? You're gonna pay attention to this side. Oh, show. Okay. Right. But if you didn't have this, then you're only on the clue train here. But if you're using your pivots, you knew it like days, a day and a half before it happened. Now, of course, a lot of this again is Fed stuff, but the stuff happens even without that Fed stuff. So, anyways, yeah, one thing you might want to watch here is iron ore and coal, as well as gold, which you normally do. Okay. So I want you to look at this closely, and then I want to show you a different chart. Ready? So it was pretty low. Let's get back in here. So the end of December. Well, it's not perfect. Let's click maybe, or maybe a daily. I don't want to do this. Okay, so we'll do it that way. And then you look at, here's iron ore. Iron ore has done pretty well this year, right? Right? Since about since the presidential election, it's really what it is, isn't it? Since late November. So you can see there's a move and then boom, counter move. And maybe they're related. The Aussie dollar's done quite well, but so there are a couple of things that would drive iron ore and coal. And that would be Chinese demand. And one thing that we may know is that the Chinese government has been producing steel for the sake of keeping people with jobs, sort of a New Deal thing, right? And then also the timing of this rally can't be a coincidence. I mean, I suppose it could, but probably not a coincidence. Trump election. Remember all that infrastructure spending and all that kind of stuff? But we were laughing at the time, right? Remember, or at least I was laughing at the time. Like, what kind of idiot honestly thinks that because Trump became president, that suddenly you snap the fingers and $1 trillion is spent and it's in the real economy and they're actually doing things? I'm like, they're years away from being able to do that. But people, people in the futures market may be front running what they think is smart. Oh, Trump won the election. He's talking about infrastructure spending. He's going to need a lot of steel to build all these bridges and tunnels. And great. What happens if the world wakes up and says, oh my God, this isn't going to be easy? Democracy is slow. Right? Maybe iron ore is overpriced. That would be really bad for Aussie. Yeah, and the giant wall, but you should just use sand to build the wall. Yeah, Charlie. Yeah, so just let's keep an eye on that. Right. And by the way, if you melt iron ore into a liquid, and then you take carbon, aka coal, take carbon, and you sprinkle some carbon into the liquid iron, and you cool it, the output is called steel. Yeah, Nick, lots of sand. See, that's what I'd make, like a coffer, right? I'd make a coffer and fill it with sand. You can make it 10 feet thick if you want. And then what I would do is I would open up a used airplane sales company on the border of Mexico, maybe a hot air balloon company, maybe sell like picks and axes and shovels, in Tijuana, hang gliders. Yeah. I think you have to say it in Spanish though. Catapults, right? Those giant hamster balls that people buy now, so you can run around like a giant hamster ball. Just climb inside one of those, and they can just like trebuchet you into America. Yeah, be great. So, anyways, yeah, what time is it? Ah, I'm kind of way over. Let's do. Is there anything here that'll make me look smart? Are we held at resistance? That makes me look smart. I think what I said, it would come down, or if it spiked up quickly and then have it come down, but either way. But I think I was pretty clear that I'm still a bear, even though it's gone up hundreds of pips. Still a bear. Just looking for the time for me to participate, right? What does a pro do? Wait for the market conditions that they're looking for. When do you want to jump in, right? That's what you're asking. When do you want to start selling? Oh, well, soon. Boy, and if you're a bull, if you don't buy this in here, you're silly. When you look at the roll reversal, look at the pivots, roll reversal. Okay. I think I already have it lined up. Oh, no. That's what this was. Sorry. You never tried this? Was it last week? Yeah, Friday. But anyways, you bring it over. Now, if you're still a bull, you should be looking to buy it soon. Doesn't mean just blindly buy it. Drop into smaller time frames. Look for the market conditions which are conducive for buying. Right? Somewhere in here, you probably want to buy and rally it up. And somewhere up there, you're going to want to take profit. So to calculate it, right, let's say you bought it around 107.50. The target is 108.50. There's about 100 pips. Right? Maybe less, 75. So how much do you want to risk? If there's 66, then you want to risk, let's say, 33. So if you bought at 60, not 50, where's 33, right? So that's down here. Okay. It's not the biggest trade in the world, but if it works out for you. Oops. You see what I mean? So anyways, I'm out of time today. I'm sorry. I want to keep trading with you guys. I just don't have much more time. Miss you guys. Even just doing 45-minute webinars, and I ended up missing you. I'm like, oh man, I miss my bunch. I miss my crew. But I really should go. I need to knock this out, and then I wish I could just like do what every other college student does, and go to the bar and blow off steam after all the midterms. But now I have to be. I'm going to pick my children up at the school bus. I can't be hammered. Dude, is your dad drunk? No, he's just done with midterms. Yeah, he's got a limp from the war. Yeah. Why is he being in the bushes? Yeah. So anyways, yeah. Peace on earth. May the pips be with you. May your profits be above average. I'm going to test you next week on that quadratic formula. So don't forget that. Well, Joe, the strategic game of parenting is challenging enough. Oh, yeah, I noticed you said you post a trade plan on the site. Is it okay to do a breakdown with explanations? Of course. No. No, you should break it down as much as possible. Remember, you're doing this to train yourself. Okay? You're doing this to train yourself. So I would be greedy and put as much detail as possible. So and being right isn't terribly helpful, because if you trade properly, you expect to be right. Do you understand? Even if you share my method, share it. Get filthy stinking rich on my method. Fine. One thing I ask, if you do become like a multi-millionaire, donate some money to build like a wing, like a wing at a hospital, like a children's cancer ward or something. Donate millions of dollars to that and have it named, Wayne McDonald Wing, something like that. You could change your legal name for your children to, hello, this is my son Wayne and this is my daughter Wayne. That's cool too. Yeah, something like that. Don't name your dog Wayne though. That's just rude. Name your dog Pip. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you guys. I appreciate the effort you put in every day. You make me want to be a better trader. Mm-hmm.